Welcome to the All Together Show with Eric Satz. On this show, you'll hear Eric's unfiltered interviews with interesting and untraditional entrepreneurs who ignored boundaries, followed their instincts and own paths, and are now empowering others to do the same. Subscribe to the show and learn more by visiting alltogether.show. And now, your host, Eric Satz.
The guest on this week's show is the affable Meb Faber. He's one of those rare individuals who could actually be mononymous, by which I mean everyone just refers to him as Meb, and there's no question that you know who the other person you may be speaking with is speaking about. Meb is the co-founder, CEO, and CIO of Cambria Investment Management. He's also the host of the eponymous Meb Faber Show. He's an author of 5 books on investing, and you can find him in Barron's, the New York Times, and the New Yorker. He was an early customer of Alto and provided incredible feedback along our way. And I think you're really going to enjoy hearing this conversation with Meb, maybe as much as I enjoyed speaking with him. Here we go.
This episode of the All Together Show is brought to you by Alto IRA. Alto is a digital, self-directed IRA company modernizing IRA investing. They make it easy and cost-effective for individual investors to access their retirement savings and invest in alternative assets. To learn more, visit altoira.com.
Mebin, welcome to the All Together Show. Thanks for being here.
My pleasure.
You did me the honor of having me on your podcast. The least I could do is return the favor. When I think about what you've done professionally, you're in Bloomberg, you're on CNBC, New York Times, Wall Street Journal, New Yorker, Vanity Fair, unquestionably a man of the people, especially when it comes to asset management. But this show is actually more about you as a person. So when someone says, "Hey, Meb, who are you?" What's your reaction? What's your response to that?
I feel like I'm going on Oprah. I feel like you're going to have me crying like 5 minutes in somehow. This is going to be more.
That's the goal.
This is going to be a therapy session more than anything. It's early, also early in the morning for me. Who am I? Well, I can tell you this morning, I was chasing around a 3-year-old as well as a dog. I consume most of my podcast content on my daily dog walk. I got a 14-year-old dog, so he's pretty slow. And I listen at 2x speed. I'm one of those crazy people. My wife will get in the car and it sounds like the Chipmunks. You know, it's like, da-da-da-da-da-da. And she's like, are you an insane person? Like, what is wrong with you? But I'm a huge podcast consumer, so I love listening to podcasts in the morning. And it looks like a beautiful day to go out and surf. I'm a terrible surfer, but I like going out. I'm like the Costco board guy. You know, these like $200 boards you can get at Costco. I'm a great skier. I'll give myself some credit. I grew up in Colorado. So you can see in the background, if you're watching this online, most of my crew's in Colorado. I got a little North Carolina mixed in too. So you'll hear me say y'all on occasion, a little bit of a Southern twang when I go back to the East Coast. But yeah, when things went sideways this summer, we hit the road, which is always unclear how that will work out when you have a 3-year-old, but it was great. Did about 7-8 states. This photo is from a horseback trip that we did for a few days into the Flat Tops Wilderness. If anybody's ever been there, caught a few fish. I can't really say I taught my 3-year-old how to fish, but he was there for it. Great times, and hopefully the world's going back to normal and we can all travel again and see you in person in Nashville in 2021.
Well, we say y'all in Nashville. Of course, I'm not from here, but I try to pick up a couple things about y'all as sort of as far as it's gone so far. So you spent a lot of time growing up in North Carolina, which is where Mebin comes from. Is that correct?
Close enough. Mebin, yeah. There's a little town there. Originally a surname. If you find some others, you could trace it back to Scotch Irish, and then Alexander Mebin, who came over on the boat a few hundred years ago on that side of the family. But yeah, if you know, Mebin can be used for anything. If you listeners are planning on having a girl or a boy, it works for both. But yeah, I typically go by Meb and get every 1,000 variations of that in the morning at Pete's Coffee with they try to pronounce it out here in Los Angeles.
You don't have a Pete's Coffee name? You don't just go with Meb?
I should
make it easy on
I
them?
should. I don't know why I don't. Like everyone I know that has a funny name does that. They just like, I'm Jack or I'm John. But I stick with it, and I don't know.
So my daughter is Macklin. She is one of 8 Macklins in the family. The other 7 are all men. She is the only female Macklin. She has been called every name other than Macklin when someone asks her what her name is. Madeline is very popular. But, when you come from the South and you use a Southern name, sometimes that just happens.
It's funny. You can trace back both sides of our family. I got, it's kind of a European mutt and have done the whole 23andMe and everything. Was kind of sadly disappointed when we did those because we kind of knew the answers. I was hoping to see, wait, we have this huge portion from Australia or Japan or somewhere, but no, not the case. But, it's funny, we're in 2020 and the progress of human history is so fast to where we have some letters and some old wills from both sides of the family. And not that long ago, the will, because we come from a farming background on one side. So from Kansas and Nebraska, and the wills are talking about, to my son, I leave 1 pig, to my daughter, I leave like a horse, or like $2. And then on the other side, it's everyone had like 17 children because only like 3 survived, so it's like talking about fate and how the children died from the litany of diseases and just everything that goes on in the world. And I was actually just reading a sort of related economic history book that's fantastic called Americana. And it's like a 400-year history of capitalism in the United States. Fascinating book. But anyway, this long-winded version of this story I'm telling is that you can actually go to Ellis Island online and type in a name. So you could type in Mebin or Faber, which is my last name, and see all the people that have come over on the boat through Ellis Island for hundreds of years and on what boat. So it'll be like some boat, 1800 or whatever the numbers are, later than that. But the names are so old school, it's not like the popular names you find in Los Angeles in 2020, but like just names you don't hear anymore from 100 or 200 years ago. It's kind of fun to look through there. And we found out a lot of Fabers came from sort of Denmark and thereabouts that I didn't know so much. So I look forward. I was supposed to be in Europe this month right now in Spain for a work trip, but hopefully, fingers crossed, next year.
This is exactly why Ancestry.com has just been a cash cow. So you're born in Colorado. How did you make your way to North Carolina for growing up, and where'd you go to high school?
The second part's actually a really interesting comment. The bouncing around as a child is probably the story of many children of our generation and other generations, where parents get along, don't get along again, don't get along again. So I had the benefit of going to many different elementary and middle schools and made lots of extra friends, as I always tell people, like anyone who's bounced around. The name of my high school in North Carolina, and this sounds like it might be a joke, but it's not, is R.J. Reynolds High School, which, if you're familiar as an investor, is the name of a tobacco company. Also the name of a person, of course, but Reynolds really defined that town, as well as another couple companies, Haynes, I think Sara Lee. But the tobacco business, and we could do an entire hour-long podcast on just this idea and concept of how tobacco is shaped and is viewed today, also by investors. But great school in Winston-Salem, also home of Wake Forest Demon Deacons. So got to grow up seeing all the best Wake Forest basketball teams. If you're a basketball fan, listen to this. The Rodney Rogers, Randolph Childress, Tim Duncan era. I don't think they're as good as they once used to be. But I'm also a Virginia Cavalier, so I can claim we're current champions. Only benefit of coronavirus has been we get to claim NCAA champions for 2 years in a row. But North Carolina is I get very homesick when I go back to the East Coast. I don't get homesick when I'm here, but when I go back to North Carolina, I really miss the South. Wonderful people, really warm part of the world. Nashville, my favorite. We had a debate the other night where I'd been curling, and not real curling on an ice rink, but I was having this argument with my wife and some friends. I said, we've been curling before. They're like, no, what are you talking about? Where was that? And it was on a hotel rooftop in Nashville. They're like kind of plastic. It was like a, poor man's version of curling, but they had it. This was pre-corona. So that's my favorite reminder of Nashville, that and the music.
If curling isn't the greatest excuse for drinking ever, I don't know what is. I mean, that was a drinking game, right?
As a quant, I'm always like, what would be the easiest sport if you had to try to make the Olympics and you're not gifted with, like Jackie Joyner, Carl Lewis ability? What could you try to make? And there's actually been some funny like stories and documentaries about this idea. Curling's got to be up there, but you watch these players and it's just like, it's insane.
Yeah, I love watching curling. No question. It seems like it would get awfully cold by the 9,000th hour. But I want to go back a second. I sort of picked up that maybe your parents separated, got back together, separated, got back together. I don't know. Are they separated or back together?
Oh man. Well, one's still alive. I got a couple older brothers. One's 7 years old. One's 17 years older. So I'm the baby. But yeah, I came from, a pretty traditional family. Dad was a engineer, aerospace guy, which Colorado still has a pretty big claim to fame, as is LA now continuously with SpaceX. Was literally right down the street from me. I've actually never seen a rocket launch, and they have one this weekend at Vandenberg, but it's early in the morning. And there's another one right around Thanksgiving, so I really want to go see a rocket launch. It's something always been on my bucket list. Drag my 3-year-old out. Yeah, and mom, traditional homemaker, school teacher. Interestingly enough, sort of got the investment bug from both sides, early, where totally different approaches, totally different education on the investment side. My old man grew up on a farm in Nebraska in a town of like 100 people, maybe. And that's when they moved, quote, into town. That's from the farm, which was like no running water outhouse. And you think like, that's crazy. It's like literally one generation removed. And my favorite story, I was actually supposed to be in Kansas this weekend. We still have farmland that we produce there. And my grandfather, who drove a oil truck, famously, it was like they had a indoor bathroom into the new house they moved into. And in the beginning, he was like, "This is barbaric. Who would want to use the bathroom in the house?" And I laugh about that. I'm like, yeah, that's funny. But then you kind of think about it, like actually, that's kind of a reasonable statement. You stink up the whole house by having these indoor bathrooms. It's not that crazy, but it's interesting as we'll talk about, I'm sure at some point, the investing side, farmland has been an area that you guys integrate with, I know on a few platforms, that is probably the single best asset class that is unavailable to traditional investors across the board. Probably the biggest part of the global portfolio that's just unavailable, but is a fantastic asset. And we can talk about that later.
So actually, just as long as we're on the topic, I'll go ahead and dive in and we'll come back. But yes, both Acre Trader and Farm Together are good platform partners of Alto. You have been a big proponent of portfolio diversification and alternative assets. I assume as a way to both increase returns and reduce volatility in one's portfolio. I think everyone listening from an investment perspective would love to hear some thoughts from you further as to why you think farmland is a smart investment.
Yeah. So this conversation, like any conversation with me, goes down tangents and rabbit holes every 2 minutes. So apologize to the listeners that this isn't necessarily linear. If you think about investing, let's take a step back and you think of the world. If you were to go buy every asset in the entire world, what would that look like? And that's something we call essentially the global market portfolio. And if you look at just public assets, so stocks and bonds, issued by companies, but also governments and sovereigns, so traditional government bonds, but also corporate bonds, that roughly looks like half stocks and half bonds. And of that, about half is in the US and half is in the rest of the world. My favorite investing book is Triumph of the Optimists, and it looks at an investing history of markets going back over 120 years, not just in the US, but in Germany and China and Australia, and how stocks have done, bonds and bills and everything in between. And the great takeaway from this book, and by the way, it's like $120, so you can get a free download of the book called the Credit Suisse Global Investment Returns Yearbook, which they put out yearly. And they have sort of like a summary condensed version. It's fantastic. And there's a couple interesting takeaways. The first is that, hey, stocks do great over time. So do bonds and bills. But there are so many examples where if you just concentrated in one country or one asset class, you got taken out of the game. You got taken to the woodshed. So you invested in Russia, 1917, government said, thank you, market goes to zero. China, 1949, same thing. Many times where there's markets that declined by 80% or more, including the US. The US during the Great Depression, stock market went down 80%. And there's also other takeaways, such as the US, 1899, if you and I were sitting around sipping champagne or tea and said, what do we predict the next century is going to look like? Probably not everyone would have said the US is going to go from being, and it wasn't the biggest stock market in the world. It was number 2 after the UK, but went from 15% of the world to now 55%. So it's over half, which is incredible, of course. But even then, it wasn't the best performing stock market. There was one or two that did better. I think tiny South Africa, maybe Australia. I would have to look again. And then others that had essentially zero return, Austria and others. Long-winded point of this discussion is that fantastic place to be if you diversified across all the countries in the world. You diversified across stocks and bonds and bills. And this global market portfolio, the beautiful thing about it in 2020 is it's essentially free. What's missing out of this portfolio? There's a few asset classes that are really hard or haven't been what we call securitized and easily investable in. Farmland is one. A massive asset class being single family homes all around the world. That's hard to invest in. Real estate, you can get mostly through corporate REITs. We just actually launched a REIT fund. Only person crazy enough to do that in 2020, launch a real estate fund. We did about a month ago. But single family homes, it's hard. That's most people's wealth, particularly all around the world. And then lastly, of course, is farmland is massive. Now it's pretty differentiated. There's blueberries in the Northwest. There's almonds in California. There's wheat in Kansas and corn in the Midwest. All these different type of farm, and now cannabis and hemp, of course, too. The whole point of this entire discussion is you want to put together a portfolio that has some of the main levers. Going back to my mom in North Carolina, my mom and grandma, great cooks, but like old school, don't really use a recipe, kind of use a recipe, just mix and match things. And so you're making those Toll House cookies. It doesn't matter exactly how many chocolate chips you use, how much flour and butter, like you got to feel kind of an idea. You put them all together and the cookies are going to come out great. And that's the same thing with the portfolio. We did this book called Global Asset Allocation that looks at like dozens of portfolios, some of the most famous gurus all around the world. And the takeaway was that they all do great. They all zig and zag. In any given year, they could have like a 30% difference in performance. But as long as you have the three main ingredients, so global stocks, global bonds, and lastly is global real assets. And real assets would be real estate. It would be something like farmland or commodities or that type of genre that does well during it. And the whole point is to have these three levers that kind of do well in different regimes. Anyway, farmland is one that's a huge pain in the ass if you're actually doing it direct. And it's having this generational shift from it being, a huge portion of the country. Again, back to 1899, we're farmers. And now no one wants to do it. The kids that are my age and younger there, no one wants to do farming. They want to move to Denver or to Chicago and live with, much, much younger, more dynamic than being on the farm. But it also presents an opportunity to actually, put that into effect. Anyway, it's a part of I think a great portfolio. It's just a huge pain to access. So
clearly we're hearing about the effects of the pandemic on cities. The effect being that people are leaving cities and they're going to Colorado, they're going to Utah, they're coming to Nashville, they're going to Florida, they're going to North Carolina. Do you think this will have any effect on the desire for individuals to sort of go beyond the gentleman farmer and back into farm operations, or is that just a bridge too far?
I liken farming very much and very similar to the way to think about it for people who have never farmed is it's very similar to commercial real estate. So let's say you buy a building that has a bunch of tenants, or you buy a farm. There's a lot of romance in that. Okay. I'm going to be an owner. I'm going to get monthly passive income checks. That's how people think about it. And then comes the reality. All of a sudden you have tenants. One is playing music till 4 a.m. One of them says, "Hey, I got black mold in my apartment." The other, spills corrosive acid in the bath. Like who knows? Like on and on and on. It is not the romance of owners and just owning your own home. Like everyone listening to this who owns a home can relate. Hey, I have in LA, like every 2 years that you all of a sudden have a bunch of termites, just on and on and on. And on the flip side, same thing with farming. Like it's not simple. It is a huge pain. And that's part of the reason, investing that you earn that revenue is because if it was just easy and we all could say, hey, I'm just going to buy this, it's not that simple. As an example, I mean, we had a few years ago, and my family's been farming for decades. You even have crazy things happen. Like we had a combine catch fire and burn down our entire field of wheat. So it's like talking about tail risk and all these other problems. Like many things, people see like there's old famous Chinese proverb is like, fish see the bait, but not the hook, so you see the like allure of any, and this applies to any asset class, applies to stocks. It applies to people, investing in Tesla and Amazon. You see the beauty of it, and then you look a little deeper, and it's not so simple.
It's definitely not simple. It's a hard life, farming. And those who receive the investment deserve every dollar, in my opinion. They're doing the hard work. So I sent you a questionnaire before the show, and one of my favorite questions on there is incredibly vague. It just says side preference. And I don't know if you remember, but you said right. And I'm just wondering why.
I don't even understand the question. What's the question? Side preference?
Yeah, side preference.
Side of so what?
Left or right?
I think maybe like right or left-handed.
So that's exactly my question to you. What made you say right? Why not left?
I think that like when answering a lot of these questionnaires, like questions like that, like when you do like the speed rounds, I try to just answer the first thing that comes to mind. I feel like that might be a more honest but totally non-useful answer to the question. I don't have anything. This is like, so Charlie Munger, famous investor. There's things I'm extremely opinionated about, and there's things where I'll just be like, I got nothing. Terrible for an interview, but that's my answer. There's nothing useful here.
So let's come back to the ingredients in the food, the food subject, because sort of like with your cookies, as long as you put enough butter, sugar, and chocolate chips, like it's hard to go wrong. So you have a preference for spicy food, and where did that come from? Do you know? Was it part of North Carolina? Was it hot chicken that people like to write about today?
Well, hot chicken's more up y'all's alley. That's a Nashville. We've had like, I think a dozen have moved in since to LA following y'all's lead. North Carolina has one of the world's great unsung hot sauces. Texas Pete, I think, is from Winston-Salem. So if you listeners haven't tried that, that's up there. There's also a great Asian, I think it's a startup called Fly by Jing that has a few different powders and hot sauces if you want to try a new one in 2020. I'm sure when in 20 years from now, when we can actually sequence our genomes in like the full Gattaca method where you can just go to a window, sequence it, and it could tell you a lot more than 23andMe. All 23andMe can really tell me now is you have brown eyes and you have like restless leg. Other than that, most of it seems to be not that useful yet. But at some point, I think it'll tell you things like, hey, Meb genetically has a preference for novelty. It's that seeking new experiences, whether that's through, who knows, a predication towards like interesting hot sauces, cultures, ideas. I'm guessing it's part of that. It's written in the code, the nature versus nurture, the best. And I started out as a biotech guy in college. So I definitely have still an interest and a hobby in the genetics in that world. Don't do it so much anymore as a quant investor. But, I think the best analogy I've ever heard is with genetics is like your genetic code gives you like an instrument. It's like, hey, you're born as a saxophone or a trombone or a guitar, but it doesn't determine like the songs you can play, right? It tells you like how high you could probably jump. If you're 5'8", sorry, you're probably not going to be in the NBA. If you're born with certain abilities and preferences and differences, but at the same time, that's just sort of the base case. So I imagine somewhere deep in my code is a novelty seeking. I think my family would probably agree with that one. And that's maybe why I come up with such weird ideas on the investment world. I mean, if you look at, we regularly do articles on like things I believe that no other professional believes in, and there's dozens. There's certainly a lot of them.
Well, one of the core values at Alto is you do you. And one of the reasons I was excited to have you on the show is because you certainly do you. One of my favorite things in the world happens to be skiing. And so what's your favorite mountain?
We've, I can happily say our podcast is sponsored by one of the ski passes. So shout out to Icon. You get a free shout here. And that sort of has determined the past few years, like where to go. It's like what's on the list. I grew up skiing in Winter Park. If you look closely enough, you can definitely see some sutures and scars from the trees between Outhouse and Candy Dancer. I got some on my booty and about everywhere else on my body from doing unwise lines on a mountain. The one over the past few years that's been really, I hate to even mention it because it's changed so much in the past 5 years is skiing in Japan, which a lot of people don't know, but has some of the most consistent snow every year and amount of snow of anywhere in the world. And so on top of not just the actual skiing, there's the whole cultural element. Japan is unlike any other country in the world. It's an incredibly beautiful and very foreign culture to go visit. And the best part of going, give also a shout out to our guides, Le Grand Adventures, is they've done it a million times. So you get, sometimes if you want to go into the small towns where you're going to be the only gaijin you'll see anywhere, and almost nobody speaks English. But the mountains are just really special. However, you have seen, some development. So places like Niseko, which is sort of the Aspen of Hokkaido, has turned into this, and it's good. I think the development, it's a beautiful mountain. But if that's what you're looking for, if you want to go get, a Michelin dinner after skiing, that's the place you go. If you want to just go hit backcountry or no one else around, this is also, I love tying in little bits of investment, ideas and wisdom. Japan is such a phenomenal example of the possibilities of what can happen in markets. You and I can probably remember in the 1980s, Japan was the largest stock market in the world. So I said right now, US is at 55% of the world. Back then it was Japan. But it was the biggest bubble we've ever seen in stock markets, where the PE ratio of Japan hit almost 100. So for context, markets on average are around 17. The US is one of the most expensive in the world now at around 32, 33. Not terrible. It's 45 and 99. My favorite, bubble, right? The internet bubble, but it's been as low as 5 too. And the problem with that is like it just gets stretched too far. So Japan just now, 3 decades later, is getting back to all-time highs in the stock market. So there's an entire generation of Japanese, if you talk to them about investing, buy and hold isn't even a concept. They're like, what are you talking about? People don't make money in stocks, right? Like you could try to trade, but it's gone nowhere for 30 years. Entire generation of people that have a different belief on investing than the people in the US. But my takeaway from what I was going to say about the skiing was that because of the boom in Japan in the 80s, you had all of this sentiment that was going on, or the Japanese business model. I mean, dozens, hundreds of books about the Japanese business model, how it's going to take over the world. They were buying up all the marquee properties in the United States, golf courses in California, buildings in New York, and built out like hundreds of golf courses and ski resorts in Japan. And so I'm going to murder the number, but there's still, like, it was at a peak, it was like 800 ski resorts in Japan. Japan's not that big of an island, and it's still hundreds of ski resorts. And so you have a lot of these little legacy mountains that are like mom and pops with like one or two lifts, with this beautiful terrain and all this snow that are still there. And so it's this residual of this boom and bust that you see that's had effects for an entire generation. Good news for skiers, not so good news for investors, but it's a good lesson. It's a good lesson to learn. Japan's still a top 3 economy in the world. And so people think that these things can't happen, in the US or other places. Like they do, they regularly do. And it can have kind of far-reaching impacts, which is another reason why, again, you want to diversify across lots of different assets and geographies and countries and investments.
I still remember living in Manhattan in the early 90s and, the concern that Japan was buying every building that mattered in the city. And then poof, that all blew up.
Now, ironically, it's we had on a podcast, we do a series now called "What's Your Best Idea?" And we had on some of my favorite people from Wisdom Tree, Jeremy Schwartz. And just now it's being long Japan stocks because everyone's forgot, no one cares. They've gotten cheap again, and they're just breaking out to new highs now. So maybe in 2020 it's an opportunity, but 30 years later.
What's old is new again. So why UVA? How'd you decide to go to UVA?
I'll give you the honest answer.
And what year did you graduate?
I was 2000. And if you had seen me last night, I was wearing, I just bought the most expensive pair of shoes I've ever bought in my life, which was partially to go through the experience of the sneakerheads, this talking about securitizing assets. You guys may be even plugged to this. I have no idea. But StockX has a platform for buying and selling shoes. And I think that's absurd, of course. But Nike put out a limited edition pair of Champ Dunk shoes, which were Virginia colors because they won the championship last year. And so I said, oh man, of course I try to buy them, sold out, but they went on to StockX. And I'm a cheap bastard. I'm a value investor. So very clearly, I'm not going to pay $250 for a pair of tennis shoes. So I waited and waited and waited. They never came down. These sneakerheads have cornered the market in Virginia colored shoes. Only reason I could justify it for myself was because they have the same color as my football team, which is the Denver Broncos. So I can use them for both, orange and blue. But anyway, I definitely take a better care of them than probably I would if they were $50. Anyway, so Virginia, going back to the beginning of the conversation, I come from a family of engineers. I definitely wanted to be an astronaut or an aerospace engineer. But at the same time, as an 18-year-old or whatever you are when you go to college, I wasn't certain. And so wanted to go to a university that had a good engineering program, but also a liberal arts curriculum that was good in case it didn't work out or it's not what I wanted to do. And that actually narrows it down pretty quickly to about a dozen schools. A lot have one or the other, and not both. And so Virginia, for me, it was also important lifestyle. Wanted the college experience of being able to go to football games. And so it came really down to Colorado, the Buffaloes, and then Virginia, the Cavaliers. And I said, whichever one I go to, the other one, I'll at least go spend a summer studying and live there and take classes in the summer. So ended up at Virginia and went to school at Boulder in the summer, one summer. But the aerospace engineering very quickly learned that that wasn't about being an astronaut. It was about a lot of science and physics and chemistry, which was fine. But I gravitated pretty quickly towards the biotech side. So ended up as a biomedical engineer as opposed to aerospace. But don't do either now, but both are near and dear to my heart as well. And one of the reasons I use you guys is I still do a lot of startup investing in both of those spaces, aerospace and biotech, but as a personal endeavor rather than a public offering.
So you made the segue for me. I was going to ask you about Theranos. Obviously, we all have a rear view mirror on that one. Did you have any thoughts as that was sort of unfolding?
You learn pretty quickly everything in investing is about narratives and stories. People may say they invest a certain way, but reality is everything comes down to, we're just big bags of soup of hormones and chemicals and what we were genetically evolved to behave like did not prepare us for trading shares of IBM, investing in the Japanese yen and shorting Tesla, whatever you may be doing. So there's like the good advice for investing and the simple stuff that most of us should be doing. And then you start to go down the list of, what happens if you're starting to get involved in security selection, if you're starting to look at identifying startups that have potential. And Theranos, like many investments, in my opinion, would have never checked any of the due diligence boxes. Like there was like 20 red flags. Same thing with many of the most famous frauds in history, like Madoff. But on one hand, you still have some of these believers. I'm blanking on his name, but one of the most famous VCs still goes to bat for Theranos and Holmes, and he just will not admit that it was essentially a big fraud, but rather almost plays it off as they were just the victim of other outsized circumstances. What I have learned, so I've invested in over 200 companies, private companies, over the past 5 years. And, I have my approach and other people have theirs. But one thing people need to take away about markets, particularly with stocks and investments in companies, because what you're essentially investing in is companies. And this, I think a lot of people get this wrong, but I think it's important, is that private market and startup investors get this, what I'm about to say, and they often believe that it doesn't apply to markets, but it is exactly true in public markets too. And that is your returns on your portfolio are dominated by the big winners. And so let me give you an example. All the stocks out there in the US, take the S&P 500, Russell 2000, doesn't matter. My friends at Longboard did this research, but lots of others have replicated, including a great white paper called Do Stocks Outperform T-Bills? And the takeaway was that out of all the stocks in the stock market, it's like 2/3 underperform the broad index. So if you throw a dart at the wall, chances are you're going to underperform the S&P, which is why it's so hard for stock pickers to beat the market. Almost half essentially have zero rate of return over their lifetime. So if you buy an average stock, chances are you're not even going to make money. Not your 10% people expect, but you're not going to make any money. And I can't remember, I think it's about a quarter essentially lose all their value. This isn't like micro cap penny stocks. This is the stock market. However, there's about 5 to 10% that essentially give you all the returns. So the McDonald's, Walmart's, Amazon's, Teslas, that if you invest in these, they have such moonshot returns. So if you own an index like the S&P or any market cap weighted index, a lot of people don't know this, but market cap weighted index is simply, you ask people how you construct these indexes and they're like, well, the companies are biggest by earnings and revenues. No. It is literally price of the stock times the shares outstanding. It's the ultimate trend following momentum index. So the good news is you're guaranteed to own the winners. You can go to the cocktail party and say you owned all those suckers. But the bad news is you also own all the losers. They go down. But the good news is as they go down, they get smaller and smaller and smaller. So that's why index investing works. It's not optimal. We run lots of strategies and none of them are market cap weighted, but it's a good first starting point. The same thing applies to private investing. And so what you have when you have a lot of these startup investors, and to be clear, Theranos wasn't for the most part a VC story. Wasn't a lot of traditional VC firms funding it. The private investing is even more dominated because they're early stage. So if you invest in a portfolio of 50 or 100 companies, it's a couple of them, the Ubers, the Calms, all these other stories that go 10, 50, 100, 1,000x, not 1,000%, 1,000x that determine the returns of the entire portfolio. And it's the same sort of concept, a little more extreme because the companies are smaller. So long-winded point of my story, again, is that people, particularly startup investors, gravitate towards these moonshot ideas that have the potential, at least, to say, what if it did work? And so it's easy to get seduced by some of these charismatic CEOs. And you can say whatever you want about Holmes. She has the weirdest voice of anyone on the planet. When I watched the documentary, I was like, wait, that's what she sounds like? Why does she talk like that? But you couldn't argue that she was charismatic. And, there's a lot of other factors at play. I think the media certainly wanted the story to be true. I mean, it's a beautiful story. Hey, you got a blood device, can test you, boom. It's by a female CEO, the next Steve Jobs. So, but if you have a methodology that kind of goes down the simple, red flag boxes, and you can apply that to public markets too, any market, you would never have invested in that company. And so, but that applies to everything. Now, the good news is if you diversify, you make lots of bets, you're guaranteed probably to get one of these eventually. Warren Buffett famously says, he's like, look, we have hundreds of thousands of employees. I guarantee you somewhere someone's doing something illegal. He's like, you just can't control when you get to a certain size. And so that's the same thing with public investing. You're eventually going to hold some of these dogs. Don't feel too bad about it and move on and hopefully focus on the big winners.
That's really interesting. One of the public market statistics that I like to talk about is we used to have more than 8,000 public companies. Today, we've got less than 4,000. And of the 4,000, only 10% account for the returns in the market. It's nice to know that someone who is actually a professional public investor confirms the statistics. So I appreciate you relaying that.
I want to make one comment. And, a lot of people just kind of scratch their head when they think about this market cap weighting, because it was a neutron bomb that went off in the 1970s. And a lot of people assumed that the index, John Bogle, I mean, he's the greatest investor, has done more for anyone in the 1970s, was the index. It wasn't the index. It was the ability to offer these products at low cost. And so this cost revolution of, instead of just having a stock market allocation that is the market and charge 2%, you can now do it for essentially almost zero. But the reason market cap investing isn't ideal is because it doesn't have any tether to price. So as the stock goes up, it gets bigger and bigger and usually more and more expensive. Japan is the perfect example. If you're a global investor in 1989, you put half of your money in the Japanese stock market at the highest valuation in history. That doesn't make any sense. That's crazy. It doesn't check any common sense box. And so market cap weighted investing is problematic because it overweights booms and busts. So right now, if you look at the 45 investable countries around the world, we rate the US as the second most expensive in the world. Now it's not terrible, but the good news is most of the rest of the world is cheap to downright really cheap to downright screaming cheap. But the problem is because the market cap weighting, again, like Japan, you put over half your money in the US right now. So if you can do any other weighting methodology, it could be equal weight, GDP weighting based on value, is obviously a factor we like, what price earnings or anything like that. You end up with a better allocation than but that's the way it should be. And that's the way capitalism should be in free markets, because by the time you get to be big, by the time you get to be Apple, Amazon, there's entrepreneurs all around the world that say, you know what, I would like to make billions of dollars too. And so creative destruction takes over. And if you don't believe me, you can go look at the top 10 lists of companies going back every decade. And you certainly don't see Kodak anymore, or IBM or GM or all these, companies that dominated in the past. It's all US companies, by the way, right now. 10 years ago, there's a lot of Chinese and other companies mixed in. Now it's all US. So important point though. Sorry.
Not at all. So I'm not going to read between the lines, by the way, on some of your comments. Tesla joins the S&P. Any thoughts there?
Yeah, I think they make world-changing cars. I think it's a great lesson in a lot of things. Many investors, if you go on Twitter, the cesspool of Twitter, people want to believe in investing in almost everything in life. They want to bet, they want to have something to cheer for, and they have a myopic belief about how the world will unfold. They could be a dividend guy. I believe in gold, or I'm a crypto bull or bear. I'm a Tesla bull or bear. And the problem most people have is they don't think about all the possible future outcomes. And so, we talk about this when we do valuations for the US stocks. We say, look, the most likely outcome for US stocks over the next decade is sort of this 2 to 3%. Not going to get me on TV. People are like, that's depressing. I'm not saying it's minus 10 or I'm not saying it's plus 15, which is what investors expect in a recent survey. But I say there's possibilities that stocks could do 10, 15%. There's possibilities they could do minus 5, 10% a year. You have to at least consider the possible outcomes. And that's really where the fractures happen with investors, is they have this belief, and this is relationships too. This happens in the real world. You have a belief of what your life or your future, if I just get this job, if this relationship just works, if I can just have children, whatever it may be. Same thing with investing. They have this narrow-minded belief of what the future will be, and then it doesn't happen. And that creates massive, massive psychological, and in this case, financial problems. In the example, think about this year. I mean, how many investors do you know during the financial crisis said, put up their hands, said, I'm selling everything, I can't take it, and then never bought stocks again? And probably this year, people said, look, never considered the possibility of the things that have happened this year. And in March, and we wrote an article about this called Investing in the Time of Corona, I said, you have to at least consider that vaccines will be developed, governments around the world will handle this well, and by the end of the year, US stocks will be hitting all-time highs. And people are like, that is crazy, it's impossible, it's a zombie apocalypse. And I also outlined a bear case, and I said, you have to at least consider both. Otherwise, you're set yourself up for disappointment, which I think. So with Tesla, it's now worth more than all the other car makers in the world. There's no question, I think that it's expensive. We had a short seller on the podcast recently that laid out a lot of short selling statistics. And he said, this has been the most cash incinerating short, I think, of all time, because the shorts just keep getting mowed down all the way up. And I love short sellers, but the drama of it is painful to watch. And I think it's up again today to all-time highs. So I think it's like the 7th biggest company in the US. Now, this also, by the way, goes to show why the S&P is a suboptimal index too. Is a lot of people think the S&P is passive. Hell no, they got a committee that decides what goes in and out. That's crazy. And so because they waited so long, now it's cost those investors billions of dollars by waiting till Tesla is almost a $500 billion company. What will they invent in the future? Look, maybe Elon finds, diamonds on the moon and these cars turn into flying cars and you can summon one. Like, God bless him. I hope so. I'll put down a reservation for one of those. But one last comment. I've said this about 20 times. One last comment is that you also don't have to play. What I mean by that is, like, you don't have to go to the casino and play roulette. Like, no one is forcing you to. And so we say there's tens of thousands of securities out there. You don't have to be obsessed with two, Tesla and Bitcoin. And Charlie Munger says, go. If you're a fisherman, don't fish where everyone else does. Fish where the fish are, and there's no other people. So you want a less efficient market? Hey, go study up on Nigerian stocks or become an expert in some tiny little sector in Brazilian healthcare. You'll have a much better value add than trying to determine, Tesla. Anyway, that's my 2 cents. I love the cars though.
Oh, beautiful cars. So Charlie Munger has tremendous amount of wisdom, and I often like the fish where the fish are, not where all the other fishermen are fishing. So I have a question for you about collectibles, because you brought up StockX, which, by the way, doesn't securitize. So you cannot invest there with Alto. With Alto and collectibles, it has to be a securitized asset. So it can be with Otis, it can be Rally Road, it can be Masterworks. How do you think of the collectible market for the average investor as a diversification play?
So we did an article on my blog, which I've done for years, but it was in a 4-part series this year because we were all stuck at home. So I got the writing bug, and it was called the Get Rich Portfolio, the Stay Rich Portfolio, Investing in a Time of Corona, and then How I Invest My Money. So I lay out very clearly how I actually invest my money. And, it's a surprise to a lot of investors, but the average mutual fund manager has $0 invested in his own fund. And that is such a shocking statistic. And if you look at the percent that has less than 100 grand, it's like 70, 80%. And you say, why in God's name are they going on CNBC and saying you should buy my fund, but, I'm not going to buy it, And so it's important to me to lay out how I think about it. And so you can go read that at length later. But, collectibles, it's interesting because I grew up as a comic book baseball card guy, the child of the 80s. This was like the baseball card boom. And we're feeling an echo now. It seems to have now been this resurgence for all sorts of different reasons. And so the problem I have, and there's so many lessons in here, is my mom literally just drove out to California and dumped off 2 of my huge boxes of comic books. She's like, I don't want these. Like, you got to take these. And of course, mine are worth like almost nothing, because in the 80s, it was oversupply. Everyone was into it. My brothers were worth some more because he's 7 years older. The problem is he wrote in a magic marker his name over across all of them. So they're not really worth anything. And the funniest part is my mom, who like randomly has like a half dozen of these old cartoon comics about like country western something or other. These like 5 comics are worth more than all of our thousands of comics combined. You know, like it's just like the serendipity of randomly buying something, keeping it, and it actually
sounds like a stock portfolio.
She's amazing. You know, she did it in baseball cards too. Same thing. My brother has thousands of baseball cards, and she's like, you know, I'm from North Carolina. I'm gonna buy. I like basketball. Nobody was buying basketball cards in the 80s, and so she bought a bunch, including a Jordan rookie card. So that one card again is worth more than our entire collections combined. And there's a lot of lessons in there, of course, but collectibles to me, I missed a lot of on the investing in the collectible platforms because, and this is applied. I've learned this lesson, by the way. Anytime I look at something and say, that is so stupid, why would anyone do that? Why would anyone invest in that? That actually now has flipped from a negative to a positive. And the 2 great examples of the prior generation of startups are, of course, Uber and Airbnb. Everyone gets them now, but look back then, why would I let someone else stay in my house? Are you crazy? I'm going to go stay in a stranger's house. I'm going to get a car there. I'm going to get murdered, raped, like get in a car crash. Like in the early days, I mean, I remember getting in a Lyft. The cars were disgusting. It was just a mess. And so that actually, the framework for me is like, you flip it to, okay, that's a stupid idea, but what if it did work? And then all of a sudden you talk about, you know, the TAM, the addressable market. So the collectibles to me, in my head, I was like, why would someone want a digital fraction of a Mustang? Like the whole point of having a Mustang is you get to drive it, you know, you get to show off, hey, this is gonna be fun. Why would I want 1/10 of a Warhol? But I get it now, and it makes sense to me. In addition to 20 other things, alternative sources of income, you know, inflation, the investment speculation excitement of owning it. I get it. But I absolutely missed it on first pass. So, you know, I think, look, each to each their own. Part of the whole investing takeaway is you should invest in what you love and care about. And if it keeps you interested in behaving, but we always say to everyone to write down your investing plan, which almost no one does, and come up with scenarios that you can work through that if things, behave weirdly in the future, you know, if your investments go down 50, 80%, here's how you're going to behave. If interest rates go to 10% or -5, here's what you're going to do. If gold goes to 10,000 or 100, Bitcoin goes to 1 million, you know, work through it that way. Then when it happens and you get hit in the face or somewhere else below the belt, you don't say, oh my God, I panic. I don't know what to do. It applies to any asset on the planet, farmland, collectibles. So I own some, you know, again, they're a small fraction of the whole, but I'm positive.
And on that, Mebin, we're going to end, and I'm going to thank you for being on the Altogether show. I think the lessons that you brought to the table today about stocks and building a portfolio are also applicable to life and being ready for the fact that the unexpected does happen. So thank you again for your time and for doing it early in the day out there on the West Coast.
It was a blast. Looking forward to seeing you in Nashville. We'll go curling and have a few cold beers on the roof.
That sounds perfect.
The Altogether show is brought to you by Alto IRA. Alto knows that the public markets offer insufficient diversification of retirement accounts. That's why Alto developed a streamlined platform to make it easy and cost-effective for anyone to invest their tax-advantaged retirement savings in alternatives. Assets like real estate, VC, and crypto that are outside of the public markets and available through Alto's 21 platform partners. To learn more, visit altoira.com.